All right. Hey there. Good morning, everybody. Christopher Riggs with Texas West Capital here. Let me get some light on here. It is just about 11 a.m. Central Standard Time here on Friday, Friday, December 1st, 2023. I hope you guys are ready for Christmas. Maybe you're ready for a bit of a Santa Claus rally. I don't know. People are talking about it. I really don't make a whole lot of, opinions on that whole thing. We just look at the charts and we go with it, right? Here in just a few minutes, we'll have Phil Swanee on here. He's going to, of course, come in and talk about his charts as he does every other week, as long as he's got a chance to do it. Sometimes he's out partying, taking wild trips to Iceland and stuff like that. He lives that affluent lifestyle, the rest of us dream of. So we'll see. But anyway, what do we got? Well, guys, listen, it's the first of the month, like I said. We've got coming in, today we've got Jerome Powell going to be speaking about, before the blackout period here. Right now, there's almost 100%, the market figures 100% chance we're going to, rates will stay flat at the next meeting. But there's like a 50%, over a 50% chance there's going to be a first rate cut by the end of the first quarter. And so I don't know. I think Powell comes out and probably tries to sound a little hawkish, maybe to kind of tone down your thoughts about that. So I wouldn't be surprised if that happens. But, again, guys, we really don't worry about a whole lot. We just kind of look at the charts, right? And so with that, we can go ahead and bring up Mr. Fibaswani here with his amazing Christmas sweater there. How you doing, man?
Hey, what's up? It's December, so I thought I'd put on my my little Christmas sweater. FTX Risk Management Department 2022.
If only everybody had known ahead of time, right?
But yeah, no doubt.
Fibbo and I have talked about this a few times before, guys, and we've been around for a long time. We've been through multiple markets, and it's just a reminder that your risk management isn't simply the trade you take. It is the asset that you're trading. It is the what market you're in. It's the broker that you're using or the exchange that you're using. Unfortunately, in this case, FTX there. So your risk management, I don't want you guys to ever go through here and think, oh, it's just, this trade I'm taking. I just got to make sure my risk reward is right. Because at the end of the day, that doesn't matter if the exchange you're on, goes down. Like, I keep bringing up whatever it was, Quad, whatever in Canada, where the guy supposedly died, the CEO, and nobody knew the passwords to the to cold wallets. And so, I mean, look at that, and then of course is what happened at FTX, and even just where you stake your coins and whatnot, Celsius, Voyager, stuff like that back then as well. So I mean, it sucks. It was really a bad period of time, last year when all this kind of kicked in. But I hope, especially if you're new to trading, it's really resonated with you. So because if you've paid attention, you likely won't ever go through that yourself again. You'll make sure you don't, because you did pay attention. What do you think there, Phil? What do you think?
Oh no, I'm with you. There's more to risk management than just in and out on trades. There's always there's risks coming from different directions, so you always got to take into consideration all the risks that you have as a person trading or investing. Because I was just saying, like, what I do on my day job, a lot of clients are hedging their energy, and there's counterparty risk, because banks can go under, and we've seen a few of them happen. So that's part of it. So they, you got to worry about, credit lines and who knows what. There's a whole bunch of different risks that come about that people don't really think about.
Yeah. So definitely, guys, again, if unfortunately you were on the bad side of that, use it as a learning experience, and I know you're probably like, oh my God, I lost so much money. Shut up, man. But honestly, guys, in life, the worst thing you can do when something bad happens to you is not learn from it. The best thing you can do is to learn from it. You're going to learn more from the mistakes you make and the challenges that you face than you ever will for the easy stuff that we often, strive for, the easy life. And so, again, guys, it's all about mindset. Everything you do in life, everything you do in trading, it also, it starts, it ends with your mindset. You've got to be looking at life properly. You got to be looking at what you're doing properly, so that you can be, the most well-equipped to handle whatever's coming at you. So good to see you guys here. Who we got here already? We got T Shroom. What's up, man? We got Data. We got Nevlusian, Andrew Bennett, Kimasabi. Mav T said finally got the name set up correctly. Good to have you in, man. Gosh, if you guys are in with us or in with Fibbo, you've probably seen Mav writing a whole bunch of stuff. Absolutely incredibly amazing, man. He is just really out there. He's in our mentor program. And it's just, I've got to say, over the last few months, it's just really come out there, just done just amazing stuff. So,
no,
a lot of great stuff. So if you're in there with us, if you're in there with us, definitely read it. Pay attention. He gives his thoughts. He's like me. He explains a lot. So that way, if you're reading it, you understand why we're thinking those things.
Yep. I mean, that's really what the community's for, right?
Do what?
I mean, that's one of the whole reasons I have a community is to, hear from others, learn from others. Even though we've been doing this a long time, we still learn. I mean, every day is a learning process, and fresh eyes and different views are really good to read and learn from. So keep them coming. That's what I'm in it for, is for me to show what I have and learn from others. It's awesome.
So you guys just heard that, right? 20 years doing this. He's still learning. I tell you guys.
Always.
I've almost got, again, I'm 28 years now doing this. And I tell you every day, my biggest thing, and I hope you guys really pick up on this, my biggest thing every day is to try and perfect my risk management. I'll never have it perfect, but every day is another chance for me to work to make it better. Because, again, we're in this game where we're expected to lose. And I know when you first come in, you don't think that, right? You think, oh my gosh, being in trading is all about these profits. I'm going to get these profits, all about this. But really, the odds are much stronger that you're going to lose, especially the newer you are. And so you have to learn to mitigate that loss. You have to learn to approach the trade correctly so that you have proper risk management. So that way you get through that. As I always show you guys, you get through that whole beginning downward move so that you have money left when you get nipped and you figure it out. So yeah. Good to see you guys. Who else is here? Deadly123 Diego. Good to see you guys. Spiral Architect Michael Johnson. I'm going to really try and not screw up your name here. I hope I get it right. Matata Inu, it looks like. Man, I hope I didn't screw that up. Great to have you following along here as well. Grateful MJP says, good morning. Arrow Quinn's here. Andrew loves your ugly sweater. So does Sats, it looks like here, and Michael Johnson as well.
It was a gift. It was a gift from my son last year at Christmas. So it was he got a kick out of it giving it to me. So
see, this is the thing. If you raise your kids right, they give you great gifts. Yeah, that works. Anyway, okay, guys, let me jump in here real quick. I'm going to start off with my chart here. Let me get this done here. My Bitcoin chart, just to kind of give you the overall thing I'm looking at, and then we'll jump in here with Mr. Fibaswani, and we'll check it out there.
Actually, this chart, dude, I got a couple questions this morning about that last reaccumulation, that wedge or channel that you have, the very last one. I got 2 questions from people this morning, so that's a good. I was hoping you were going to show that on your chart today, so that because everybody, it's a concerning look, when you look at it. So I'll let you explain it, but I'm just letting you know I got a couple questions from it just this morning. So.
Okay. Yeah. Great. Again, guys, this was what I was talking about at the beginning here. Everybody expects the pullback because a lot of times we do get the pullback. We get a breakout and a pullback to retest it, resistance as support, and then we rally up, right? But, enough times that you should be paying attention, this happens, especially in Bitcoin in the early stages of the bull market, where you get this kind of pop out, and then it just kind of overlaps for a while as it's making higher highs and higher lows, right? Excuse me. And so what you're getting is this reaccumulation as it continues to right here, and then you're usually looking for a pop out higher. And so that's still kind of what we're looking for here as we continue up. Right now, based on my count, this 1, 2, 1, 2, we've got 3 of 3 up here at around 51,950. There is an alternate count that people are looking at, and I can't say it's not likely. It's possible. It's just the whole thing here is like a 1, and then we get a 2 here instead of a 1, 2, 1, 2. And so that would give us then a wave 3 target. Let me see here, right around.
Should be at least 50K, right?
Oh, man.
Maybe more.
76, 717.
Yeah. Yep.
Right up there.
Nice.
So, and that would give us minimum wave 5, almost at 100,000 exactly, with that. And that doesn't, those are just regular targets, general targets that we use, guys. Price often overextends wave 3 and or wave 5, especially in Bitcoin. But, so it doesn't matter which one of those it is because they're both higher. We can use this target initially and just kind of continue watching price action through here to get a better idea of that larger count. So either way, it looks like we should be heading up. I've got an initial, like a more local target here, right around that 41. I'd say 41,500 to 42,000 kind of area. Let's give you a nice, decent range here. But here's the thing. We've got our new pivots. The new month just started. We got our new pivot showing up on the daily. And here we are coming in sideways between that pivot and that R1. So we're almost at that R1 pivot. So one of two things will happen here. Either we'll get rejected the pivot at the R1 and we'll pull back to the daily pivot itself right around 36,750, 36,800. And then we'll get a breakout and head higher. Or, we'll kind of break out. We'll pull back around this 38,000 area. And then we'll break out. And if we do that, if we do something like this, we should expect to run all these pivots, which will get us up there almost 50,000, guys. But just generally trading pivots, if we're just looking at pivots, I've talked to you about this so many times before. If we do this thing where we kind of break out and then pull back here, and we should find support. Look at this, guys. This is from all the way through the month of November here, right? A month long, it's got this resistance that we finally broke out of. So if we're pulling up here and we pull back to that, and we break out higher, generally when you're trading pivots, that's going to give you a run all the way through the R5 pivot. So I don't want to guarantee that's going to happen, but it is what I watch for. It is a setup that I watch for. And so, I mean, this is pretty much it. Can we drop down through the pivot? Sure. I mean, I think most likely that pivot's going to hold this support. So those are the two scenarios. If we do drop through it, we should be looking at the S1 pivot, which gets us right around 35,000, which was this previous kind of resistance here. But, until we're actually breaking down through that S1 impulsively, I'm not even thinking about 31,000, guys, or 30,000 or anything like that. So that's kind of where I am. Let's see where Fibbo's looking here.
Yeah. I'll start out on the 4 hour just to go through the time frames real quick. One thing it's been a test of patience, definitely on this for sure, especially on the 4 hour. As we went down into the bear zone right here, it went down a little bit, but it didn't go below the previous shallow fib. So to me, this continues trend, or at least sideways to higher. So in other words, all the upside targets that I have are still in play. 41.6, which comes in pretty closely with what you're looking at. And where I got that from is when I take the bullish threshold here and start where my fibs start, and take the trend-based extension, and I take it from this high because this is where the bear zone low came in. So if you take the high there and use that as your extensions, 41.6 becomes that next level of a take profit target for me off of the longs that I have going forward. And then the next one above it is 45.8. And then ultimately that 48.9, 49K, 50K, somewhere right around that area. Yeah. That 48.9 has been my target for a long time. It's just taken a lot longer to get there than I expected. But the bull run's been going. Yeah. So I like what we're seeing. So I put blue in here because even though we whipsawed back and forth in there, I'm marking it as consolidation, and of course you can see that every time it went into the bear zone, it wasn't even close to the previous shallow fib, yeah. which is also a bullish signal. It's kind of it's not correcting back far enough to where it should, and it's holding even probably more shallow fib, maybe the 23% level or whatever. But I like the structure that it is, and it keeps continuing to make highs, and we just made 39K today. As Scott Melker would say, 39K all day. I'm surprised he hasn't tweeted that. He probably already tweeted that out, but I whenever it clicks over, I can see those tweets coming through. But right now, shallow fib right now for me sits at 38.5. So now that we made a new high, if the 4-hour dips back to 38.5, I'm actually going to add longs and go forward to continue this trend to the upside. So right now, bull zone. Momentum starting to get with the bulls, which is nice. We're making new highs. The momentum's increasing as we're doing it. Like we talked about, I think last time we talked about it being a pressure cooker. What it's doing, I think it's just kind of eating away that sell wall every time it gets up there, and until there's none left, and then it's just going to pop. At least that's the way it's kind of setting up for me. And then when you look at the daily, again, still in the bull zone. What I like on this one, and this is why I was getting the question, because when you look at it from the bull zone that we're in, we're getting pretty close to that first target I have on the daily, which is right just above 40K. That's my next take profit for the daily time frame. But the shallow fib's right there at 34.3. But a lot of people were asking this right here, and and that's why I knew it on your chart. You had that reaccumulation channel in there, because a lot of people were saying, should I wait for, is there going to be a drop all the way back down to the shallow fib at 34.2? There definitely could be a nice correction back toward there. But right now, the way I'm looking at it is the green positive directional index on the ADX, even though the ADX is dropped as it's going up to this point, it's still relatively high. And I look at it, I look at the ADX in zones. Something between 25 and 35 is a strength building zone. And we're still kind of above that. So to me, the strength for the bullish trend is still there. Even though we've corrected the RSI back to a little bit more of a neutral area, it's kind of in the middle of the bull zone. So it's nowhere near being overbought. And with the momentum still with the bulls not being in an overbought position, and it's kicking up against that resistance, that's that pressure cooker that we're talking about, and it's that reaccumulation in that channel that you're talking about, that I like the upside targets and the bullishness that we have in the market at the moment. So that's where I'm at on that. I still like keeping my longs on my 4-hour and daily, but there were some signals that I was watching on the weekly here. And one of them was 3 consecutive settles above the 61.8% level at 35.3, which now becomes a really strong support level for me on a long-term basis. So if it actually corrects back, it could correct back to that 61.8%, even go a little bit further if it wanted to, and then end up, settling the week back above it or something along those lines if we start to get a correction in the market. But right now we hit that 39K. We had the 3 settles there. So anytime, from a psychological standpoint, when you flip a 61.8% level from a resistance to a support level, that full retracement probability of hitting gets higher and it gets better and better, because there's just more buyers that are going to be gathering up at that support level that will help keep that trend going. So that's the one thing I liked to see on the weekly, and that's what gave me confidence to stay long on a lot of my stuff is that long-term signal. Then you get into the monthly, and since the monthly is kicked over into the new month, same kind of thing here. What I'm really going to like to see is if we get that third month above that 35.9, and then we're just talking, that's great. Can it come back down and retest that 35.9? Of course it can. But what I'm looking at here is 3 settles above this shallow fib brings the 61.8% level target in with a pretty high probability of that 48.5 on the 61.8% that I have from the high to the low here. But a couple of other things that I like on here is before from the halving back to the low is that 17 bars. And you look at different time frames, that matches up really well on how it's happened historically. So the timing of the low to the high to the halving makes sense to me. And then when you look at these lows, you got the low here, it rallied up to a new high, came back down and made a new low right here. We're coming back up to this point. So I kind of like the low, or a low, not that it's going to make a new low, but a low based on where everything's at, to where the halving point, or April of 24, could find some really good support in here. So what I'm thinking is if we end up breaking this out and get up to at least that 48K that I've been wanting to get to for a while, then the 38.2% level matches that 35.9 coming back the other direction. So to me, I feel like we can get up to that point, and if it wants to correct prior to halving, maybe it gets back down to where we're at today. And of course, that 48K will be a good profit taking level for me.
Yeah.
So if it gets up to that point and cracks back, then we buy back in, get long again, that kind of thing. Or if it cranks on out of here, that'd be great too. Either way. But
Can't really
um,
complain about it, right?
yeah, you can't complain about it. So that's what I'm kind of looking at on this here, because when you look at the halving, I just pulled up this longer term chart that shows a lot of the timing of stuff. Going back to this one, you can see it kind of corrected back, and then the low in the market before it took off kind of
Mhm.
happened at that halving. It was a little bit more sideways here, but it didn't really make a new low and went up higher. So maybe we're going to see the same thing. We rally up to that resistance point, come back down, and kind of make that low around that 35 or so, and then we start kicking higher into that new year, post halving, and then we start getting new highs. That's just based on the historical pattern. Now, of course,
Yeah.
it could change, and maybe we break out 69K earlier. I don't know what's going to happen. I mean, ETF comes out. Who knows what's going to happen there? There's a whole bunch of things that could happen that could spur on additional buying. But I feel like if we start to break this up and we get up to that 48K, it could be that level that the general public FOMOs in and just blows right through that and just throws everything out of whack. But we don't know. These are all guessing games, and that's why I like when Chris was talking about um, you know, the two different counts that there are. You have
Mhm.
that alternate count that he was looking at that's not wrong, but I like the one that he's looking at with the 1-2-1-2 because you get baby steps along the way and
Yeah.
trade it as you go instead of that larger gap of of what do I do now, because you're going to be in this mid range of I don't know what to do. And I
Yeah.
like the baby steps of just trading it along the way. Um, not that the other count can't be right. It's just that it's a lot stronger, a lot more aggressive
Yeah.
type of thing before you can
Yeah.
get in and out and do some things.
Well,
But that's where I'm at on BTC at the moment.
I like I like that you put out, the running up to 50 or so and then the pulling back maybe just around mid 30s, because that's what I'd been talking about like since for the last year. I said, listen, here's the thing, we got to get above the 25, the mid-August swing high, the 25. I said, we do that, we break the bearish market structure coming off the all-time high, and that sets up further movement. And I said, if we overcome the mid 30s there, I said the odds are we run up toward that upper 40s, lower 50s area. And then when we pull back, it's going to pull back to the mid 30s, or it's not going to get back down there below.
Yep.
And and then we ended up having that 6-7 months sideways there, at right at 30 or so, 31.
Yep.
And so a lot of people waiting for that. But like you say, man, if we get the pop out and we does that run there, I don't think they'll ever get that. And if you're sitting there waiting for that, see, this is where in trading, guys, you have to look at what kind of risk you're willing to take and where you're willing to look, because you don't want to sit out when you don't have to. But part of getting in is understanding where you need to be able to get out. There's a lot of talk about DCAing, and it's worked. It's worked so far, right? As long as you had time, as long as you weren't impatient, it's worked. But the thing is, at some point, it won't work, right? So if you were DCAing, let's say after 1929, when the Great Depression happened, and you were, dollar cost averaging down, right? Well, it went after the low in 1932. It did not break out higher until 1955 or something like that. I mean, you're talking like almost 30 years, guys. And for most of you, if you're DCAing into that, whatever, and if you're older, like Fibbo, or like myself, okay, we'll say me. But if we're older like that, do you have 30 years to sit there and wait for your DCA to finally be profitable? And I just want to always kind of mention this because I think people, they say it way too easy online, especially with Bitcoin. Just DCA, just DCA. Well, dollar cost average in, and that's fine as long as it goes up higher. But if we've got some major kind of potential, depression, especially some type of global depression coming in the next, next 3 years or 10 years, I mean, you have to look at where you are. If you're 20 years old, you'll probably be fine. I don't know, it'll probably go sideways for 50 years or 60 years, because the other one was just a zigzag. It was a quick down, right? 3 years down bottom and back up. So this next one would likely be much more sideways. It might not go down quite as far, percentage wise, but it'll go sideways for longer. So you really have to take into account, again, guys, risk. Your risk is not just the trade you're in. This is another form of risk here. Because if you are wiser, older, like we are, we don't have 30 years or 50 years to sit around waiting for the damn thing to get profitable on DCA there. So, the more you can understand and learn about risk management and learn about proper price forecasting, especially if you want to hold for a while, you absolutely have to know it, guys. You have to understand how to forecast price properly. Because otherwise you could still get caught. Like I said, and a lot of you probably going, oh, no, you're whatever. Shut up, man. Shut up. And that happens. But hopefully you're not. Hopefully you're really just taking into consideration what I'm saying. I'm not saying don't do it. I'm just saying if you're going to do it, understand the implications of what you're doing. I think too many times, especially as traders, we kind of lie to ourselves about, about what we do and don't really know, about how good we really are or aren't, about the mistakes we made and how bad they really are or aren't, Yep. We tend to minimize the mistakes and the bad stuff and maximize, the hopes and dreams and the good stuff. And so I just want to kind of step out here, guys, and just kind of remind you to be honest with yourself, step back, because if you're lying to yourself, you're the only one you're going to hurt, and you will hurt yourself. You will. So anyway, yeah, guys, listen, hit the likes while you're at it. Subscribe to us. Leave comments, man. We'd love to have that. You can follow Fibbo at Fibbo Swanee there on X as well. Okay, guys? So go ahead, Fibbo. What were you saying?
Yeah, no, I was just going to say, when it comes to, DCA and, lump sum investing, that kind of thing, they're both tools, but I do see a lot of times where people are just flippantly saying, oh, just DCA. And they don't consider that there are risks involved to DCA. Just because you're buying in every week or every month or whatever, there are risks involved. And I feel like a lot of people think that if you just DCA, you'll be fine. and that's not necessarily the case, but they are tools, and DCAing is a good tool. Lump sum investing is a good tool, and it's really the timing of which you should be using at which time. Sometimes DCAing makes sense and sometimes it doesn't. And I think a lot of time people, I hear it a lot, like, oh, just DCA and you'll be fine. And to me, that's just not the case. And you lay it out, look at your risks. What are the risks? That's that kind of thing. So it's really, that's why I think it's good for, communities like what we have, is when we talk through these things, we're going to really find the better time of when it is time to DCA versus lump sum investing or whatever way you're doing it. But I don't know. That's the way I kind of look at it. I just don't like when people start flippantly throwing things out there and not really taking risks into consideration, because that's where you get hurt.
Exactly.
And that's why we're, not that we're like the end all be all best risk managers in the world, but we know the red flags, and are we going to be right every time? No, but it just from experience that we've had over the years, we can probably see things that others don't really see yet, just from experience. But I just wanted to throw that out there just to kind of say, even though you're DCAing, look at the risks and mitigate those risks when you can.
Yeah, exactly. And guys, in case you really don't understand, we're talking like 50 years of experience between the two of us. So that's why you see the gray in our beards, man. We earned that, right?
Mine's starting to get a little bit of a blue tint. Does that mean I'm getting really old?
Blue tint? Oh my gosh.
No, I think it's the lighting. It makes it, I think it's the lighting in this room. It's making me look blue.
Seth says, what about retirement accounts? Are you all trading your IRA money? So I don't actually use an IRA. I use a combination of trusts and LLCs. Because it's just way too much for me to go in here, guys. It's a whole different subject, but your IRA account isn't as great as the government makes it sound to be. You can get a lot more effectiveness out of certain types of life insurance combinations with trusts like family trusts and whatnot, and LLCs put together in a specific way. It'll return you a lot better for a lot less that you have to worry about than the IRA. So. Yeah, I don't use them myself because of that. So, But anyway, okay, yeah, Fibbo,
Oh,
jump on top,
you
man.
want
What
me
you
to
got?
say what I do?
Yeah, tell what you do, man. Yeah,
I
you
mean,
just got in there. I didn't think you wanted to share.
um, I do have a 401k through my day job, but I'm only in it for the free cash that the match is that the match is there. Um, Other than that, I really don't have much in there. It's really all cash. I would say at least 90% of it's just cash. I really don't want to mess with that as much as I do. I just don't. I'm in it for the free money is really what I'm in
The
it
employer
for.
match.
Yeah,
Yeah.
and I really don't do. I have IRAs, but like it's a lot. Like you said, it's a whole different world and explanation on why I use them and what I'm using them for.
Yeah.
But my general um, time and effort goes into what I do, with the trading and stuff, and use those profits as wealth building. Uh,
Yeah.
but but yeah, it's kind of hard to start talking about because it gets really in depth with it's a whole different world when you start looking at financial tools and
Very
those kind of
much.
things versus what we're doing right now.
Yeah,
Yeah,
exactly.
but yeah, that
Exactly.
401k for me is just for the free money. If they have a match, if they didn't match, I wouldn't be in it.
Yeah. Yeah. There you go. Exactly. See, Barbara says retirement special show coming for soon from Christopher. I've been thinking about it. I may do something next year sometime, guys. Um,
I mean, just on trusts alone, it would take 2-3 hours to explain all the different things. It's crazy.
Yeah, yeah. I mean, but it's crazy the way that you can use some of these financial tools, guys. And that is something that's funny, Barbara asked, because it is something I'm considering doing sometime next year. So it's going to take a lot of effort to put it together and put it out there. Because there's a lot of questions when people come in with it because it is much more advanced than just simply an IRA and kind of change it in there. And basically the way it is, guys, for the most part, if the government says, hey, you should be doing this, it's probably not the best thing you can do, just as a general rule of thumb. It might be okay-ish, but it's usually not the best thing that you can do. So,
Yeah,
um, you know,
I'm at the stage right now where I'm getting to the age where I got to start looking at long-term care insurance. And and but I want to but when I start to look into it, I want to know if there's some kind of like mixture between the long-term care insurance and maybe a whole life insurance to where I could, it's a savings plan for me,
mhm.
to where I can pull money out. And I haven't looked at it in depth yet, but I'm sure there's some kind of hybrid of some sort out there. I just haven't looked at insurances in a while,
Yeah,
but definitely
yeah,
those kind of subjects could definitely be a whole different topic that we could cover, as I start to research on my own. And once I get enough information, yeah, I'll throw out what I've learned once I got all that out there. But right now I don't have much on that at the moment.
yeah. Sats knows what I'm talking about. He says, I got you. ILITs and trusts are a different ball game. Yeah, exactly. I think he knows generally what I'm talking about for sure.
Yep.
So yeah, yeah. So what kind of chart you got here, man, besides Bitcoin?
I just threw up some different ones here this morning. Just kind of looking at some things. Ethereum, just kind of same kind of deal. In the sideways, we actually went up a little bit, but we did not crack into the bull zone right here. Even though the price is coming up, so I've been waiting for that new bull zone to add some longs. But we've been in this sideways market, even though it went
Yeah.
into the bear zone down here. It didn't go. It tagged this previous shallow fib, which was a buy, and then the stop would have been 3 settles underneath that. But the first buy I had was there, and been waiting for the target to hit, which it didn't hit. This one was a different one. This target hit, then came back down and rebought. But I'm aggressive. I'm all the way out here at, you know, like way higher. I could probably get some nearer term targets, but I've just been waiting to see what it's going to look like after it gets out of this consolidation. And I'm hoping that it pops into the bull zone. And once I add some more longs, I'll get some more near term targets. Because one of them would be along the lines of using like a trend based extension like I did on BTC. Because if you
Mhm.
start down here where my threshold started, go up to the high, uh, right about here. I'm roughing it in, but and then come down to the low that hit. I mean, that's even all the way up at 2480. So in other
I
words, if
like
we
that.
start breaking this high right here, you're getting into an area of very little resistance. So I think I think it could pop a lot higher once we get past this level of around 2140 or so going forward. But that's what I've been kind of waiting for on ETH, is getting into that new bull zone and starting to get this thing cranking above. Same kind of thing with BTC, just waiting for it to break that ceiling,
Yeah.
And get us a nice resistance to support flip. And right now, that's why I've been kind of waiting on there. So when you look at it on the daily, it's a little easier of a picture.
Yeah. Nice
Went
clear
up,
picture.
went up, hit the target, came back down, bought the shallow fib, just waiting for the movement up to the target. This one's at 24.33. So that's still a lot, pretty good movement that I've been waiting on. But the exposure I have in Ethereum is not as great as my BTC. So I'm
Oh, so
willing
you're
to
not
wait.
Raul?
You what?
You're not Raul, pal?
Yeah,
He was so
no,
long
no,
there in
not
Ethereum
even.
back before it pulled back.
Yeah, not even close. But I'm willing to take on that longer term risk based on the exposure that I have. So I'm not too concerned with that at the moment. But ADX is still showing bullish,
Yeah.
bull zone, waiting for that new high, bringing some new buyers. Which you shouldn't really be buying new. I mean, that's just the way it goes. Once you start making new highs, then people will start FOMOing in and start pushing that thing up.
The goal is to be in before it breaks out, folks.
Yeah, exactly. Yeah, no, that's why you buy down here. At the shallow fib at around 1940 or so.
Yep.
I got gold. I've been moving the fibs all day today. It's been nice.
Close to the all-time high.
Yep, getting there. My next target was 2081, which is pretty much almost there. So basically, that's what I'm looking at here. One of the things that I do with my method is on this move to the upside here. The shallow fib, has been moving higher and higher here, but it never. Once we rallied up here, it never came back down and hit the shallow fib on this move to the downside right here. It did come down and touch nicely on the top of this 141, which was right around 2050. Since it didn't hit the shallow fib, the rules are to buy with 3 consecutive settles above that. But this third settle is getting up close to a target. So the way I approach this is even though it rallied up to this point, I will limp in. In other words, if I normally would buy 10%, I'm only going to buy 5%. And if it comes back down inside the this fib extension zone here, I'll add my other 5% and get that average. And then also I will have the shallow fib in there at 2026. If it gets all the way back down to 2026, then I'll actually buy another 10%. So that's the way I approach it. So it is a little risky to take that buy on the move on this big daily move that we're having, but that's why I'm going to limp in.
Yeah.
So if it corrects back, I'll just buy a little bit more. But the way everything is kind of structured here, with the breakout of the trend line, and it came back down and retested, and then rallied on out almost to the trend line. Basically, that target is the trend line objective measurement is where that comes from. But ultimately, once you get 3 set, I kind of talked about the 61.8% psychology. Once you break that and flip that to support, the 100% becomes a higher probability. Same thing with the extensions. Is just if this 2050 holds and flips to support, then that 200% becomes a higher probability at that 2144. So that's my mindset or my psychology of how I look at the market. So even though we're rallying up, doesn't mean that it's going to come back. It could go straight to 2145. We don't know. So that's why I would limp in instead of just buying just getting a whole bunch of stuff right away because of the movement that we've had. So, but I like the way gold's structuring. I don't have silver pulled up. Maybe you'll pull up silver later.
Yeah, I'll pull it up here in just a second.
And then I got DXY just inched into the bull zone, but still underneath the previous shallow fib. It needs to have 3 settles above 103.90 to give us that switch back to bull. So any movement that we've seen up in this is just a little bit of a bullish correction in an overall bearish market. So I'm still very bearish on the dollar. I think the only reason it went up this morning is because Powell talked a little bit. So I think So whenever he talks, everybody's like, okay, rates, I get it now. And then the dollar starts going up. As soon as he starts stop talking, it comes right back down to where it was before.
Yeah.
But
Yeah.
for that near-term news traders that are going on in there, which I call noise, by the way. But
Yep.
um, as this starts to come back down here, being in the bull zone, shallow fib's still really high. Some people actually trade. If you shorted it, you would have been buying right here on this target, which is,
Yeah.
if you go back in history to some previous zone, that's where some of the buying interest was in, and that's where the target was. Some people would buy this and sell into the shallow fib as a little, you know,
Little
while in
counter
the
trend trade.
yeah, exactly. I didn't mess with it. I'm really just waiting for some of these downside moves. I'm looking at uh, once this 141% level down here gets kind of tested. I want to see what it looks like when it gets down to that area, which is around 102.20. But ultimately, I'm not going long the dollar until it touches 100.2 on the 4 hour. Um, I think it's like 100.8 on the. It's pretty close to where the daily is too.
Yeah.
Uh, but that's where I'm looking to like really go long if it gets down there. But in other words, I'm just kind of sitting back on this one and just kind of waiting on see what's going to happen here. If it's gonna really start taking off on this bull zone, or if it's just going to continue trend. And right now, the way things are looking, momentum's not the greatest for the bulls on this latest move right here. It dropped and it's been going kind of sideways. It's in the low 20s. I do like. I'm a little bit. It depends on the asset, but I think the dollar is usually somewhere between 25 and 30, 25, 35, somewhere right around in there to where it starts to build. Like it's a signal that trends actually starting to build strength. And in
Hmm.
this case, the movement up in price hasn't really built any strength to it. That's
Yeah.
why I think this thing will start to come back down. SPY. Let me move my fib up a little bit, get closer to my target. I went long on the new bull zone with a target of 4,600 basically, or I think that's where, 4,603. That's where my extension, basically it's the previous high. I think I have an order in just below that, just in case it doesn't hit the exact high. But fibs moving up, shallow fibs there at 45.33, making good money. I mean, we got in here, just been kind of riding it, been kind of patience and just kind of waiting.
Yep.
But
Yep.
there hasn't been any signals otherwise of. I do have a stop. I did place some stops in here, just because it's been going up pretty good and it's really good money, and I don't want to. I don't
Yeah.
want to lose it.
Don't want to lose it.
Yeah, exactly. So I do have some stops in here. But if you're looking at just threshold theory, you're waiting for the target, and then on a dip, you would buy it at the shallow fib at 45.33 and look at even more upside targets later. So everything looking pretty strong there. Just a couple quick. Mara is one that everybody's been asking me about. Bull zone working really well, almost up to the target. Really nice trade if you're in it. I wasn't, but a lot of people were looking at it. The bear zone came down, hit the target. So if you were actually playing the short side, you made a nice trade. Then you would have waited in here a little bit, and then the bull zone would have kicked in. You wouldn't have bought until about right here, which is 3 settles above the previous. So you would have been long at about 950, but 950 to 1340, not too bad. So if you're playing this, because even though it dipped down here, didn't go into the bear zone, so you would have held it the entire time. Maybe you could have got out at 1190. Just depends on your risk tolerance, but it went up, kind of retested at 1190, and it's working its way up. So I'm still bullish on not just this one, but any of the mining stocks right now are looking pretty good,
Yeah.
and
The
they're
Bitcoin
working
miners.
really well on the levels too. So that's kind of nice that it's working the way it should. Tesla's still in the bear zone, hasn't went back into the bull zone, just kind of working this downside channel. Just looking for some movement back down to the downside of this channel before I would even consider buying it. Basically, the 100% target is kind of the area I was looking at 167, or a new bull zone. So if a new bull zone kicks in, we'll be outside the channel. We'll get some more upside targets on that, but still kind of sideways to lower going on Tesla. And then the last one I had that these are just the ones I was looking at this morning. If there's any
Yeah.
other ones we want to look at, you just let me know. But Solana, nice bull zone. It actually hit the target And then it didn't hit the shallow fib here on a rebuy. But when you look back here, this is where the next extension was. Since it hits the target, I go back into history to see significant 100% level, and then the extensions come into play. So 88.81 is my next target to the upside for a sell. The only other way I would get in this is if it had 3 settles above the 100% at 68.44 or a shallow fib buy. So for me, depending on where others are in the market, I'm out of Solana because I took profit already a long time ago.
Yeah.
But right now it's still bullish. So you buy the shallow fib or a break of the 100%. But that's where I'm at on those. I mean, I went through them kind of fast, but I just wanted to show what I was looking at this morning. And I'll throw it over to you for charts.
Let me see here.
So any questions? Any questions come up while I was talking?
Yeah, I don't see anybody having a question there.
Yeah, my YouTube messed up on my other screen, so I didn't see any of the chat.
Yeah, no, I don't see any actual questions on there about it, so I think you're good.
Cool.
I think they're getting used to you, man. Starting to understand it. Let me see here. So I've got the first one here is gold. As you can see, man, all-time high, 20.89 and 20, guys. We are less than $4 away. Who's excited? Been waiting for this forever.
Look at
this. Look at this. So 1 of 5. So 1, 2, 3. 3 of 5 is up here around 27.50 is the target overall. You know, so again, the larger count coming off the swing low back in 2016. What was that?
I was saying that wave 3 right there is awesome. Where's wave 5? My goodness. Oh, that's pretty good.
Oh yeah, it's a good way up, right? But I mean, starting from down here in this 2015 swing low, you know, we got basically a 1, 2, 3, 4, and we're working on 5 here. And so based off this, you know, again, it'd be a new all-time high. We're just a few dollars away from that. So we hit that blue sky territory, you know, and price can really kind of rally. Wave 3s are usually, you know, the strongest, longest waves. Those are the ones where people go, oh my gosh, I'm going the wrong way when I was going down. I need to get in. So, man, we are so close to that. That's pretty cool. Got a great looking channel right here. EQ working its magic. And so, yeah, any pullbacks along the way overall, I think are for buying in the much larger kind of picture. We're probably getting pretty close to a local top, you know, like maybe like a 1, 2 and then a 1, you know, a 1, 2 here or something. So, you know, you'd have a 1, 2 and then a 1, 2 and then popping out higher. So you can wait for it to probably pop up a bit and pull back if you want. But I mean, I think even if you're buying here, just understand you'll probably get a pullback here and then it'll head up higher. But, you know, you're looking to go for a longer term trade on that, I think, or maybe an investment, right? Do I expect gold to retest the previous all-time high after it breaks? Generally, the expectation is that price is going to revisit previous resistance as support. Generally. I don't usually try to decide, okay, are they going to do it this time around or not? Like I said, locally here, you know, it looks like probably a 1, 2, and then we'll get a 1, 2. Let me see here. This local, if this is a 1, 2 here, so we get a flat.
78.6, man. Look at that. Perfect.
Right here. Let me see here. Yeah, 78.6 right there. We're hitting on that, right? Yeah. But that wave 3 for this one minimally would be right here around 22.60, 22.61. This can be a little bit smaller one here. But then again, like I said, I think we've got a 1, 2 here. So I think this 3 is going to overextend. So let's see here. Yeah, I think we'll probably just kind of break out a bit. We might hit like, I don't know, maybe we'll hit that 21.31 maybe or something. 50% would pull back and fill in this gap right here to around 2034. If we could get that. And I'm just taking a quick guess here. Just based on the structure, guys. But that would take this wave 3 from 22.60 or so up to around 24.55. That would overextend that wave 3. Just based on the idea, this is a 1, 2, and then this would be a 1, 2. And you get 3, 4, 5 coming up here. So we'll see how that plays out. But yeah, looking pretty good there so far. Silver Looking good on the weekly.
Wait,
Do
hold
it.
on, Chris. Yeah, go back to the gold chart real quick. I had a couple questions this
Go back
morning, and
gold
I
chart.
already answered it, but I'd like to hear your answer on it. The gap that you see right there on the gold chart. What? How
Uh-huh.
would you explain that gap? I already explained it to people, but I wanted to get your take on it. Is it something that should fill? What kind
I
of
think
gap
that's the
is it?
contract
What do you say?
switch, isn't it?
Yeah, that's exactly what
It's
I
the
said this
contract
morning.
switch right there
Yeah, because that's why
from to the
a lot
next
of people
month.
were asking me, what about that gold? What about the
Yeah.
gap? What about the gap? And I said, yeah, it was the monthly switch. But a lot of people
Yeah.
don't. If you're not familiar with futures, you might not know that that gap was a move from one month to the next,
Yeah.
or the contract switch. All right, cool. I just wanted to make sure
Yeah,
let
exactly.
listeners hear
Exactly.
that that gap really isn't like what you think it is. Put it that way.
Yeah, it's not
All right.
like this gap down here. This
Yeah,
weekend gap
it's not a
here.
breakaway
It's
gap.
a different
It
gap.
looks like one, but it's not.
Right. Yeah, it's
Because
just because
I mean, it is
contracts
a
are rolling over,
breakaway
guys.
because it's in a contango
They're
market.
switching.
It's a breakaway because of that. But
Yeah.
it's not one that you would consider like a throwback to fill it
Yeah,
because of
something
the
that you would
contract
normally think
rollover.
you'd have to fill. Yeah.
Yeah, cool. All
Exactly.
right,
Exactly.
all right.
Uh
Thank
yeah,
you.
silver. This is a good point, man. Glad you brought that up. Silver breaking through the initial descending resistance right here. Nice big weekly candle. You can see we had this pullback, and then we had this bullish engulfing outside bar here, rallying back up. So I mean, it looks like a 1, 2, and a 3 coming in locally. Right now, we've got a 1, 2, 3 up here at around $40, almost $41, $40.99. But more locally here. And by the way, we have a larger 1, 2 here. So we got a 1, 2, and then a 1, 2. And then now we got this little local 1, 2, 3. 3 would be $27.20 from this wave 2 swing low here on October 2nd. So minimum expected wave 3 around 27.20, wave 5 up at 28.615. And as you can see, that's a pretty good target on there. It's all this previous area of resistance. So we'll get 5 waves up there. We'll pull back, and then we'll have it. And so this wave 3, like on gold, would probably overextend and head higher up, and we'll finally get silver at some point above 50. So I think that one's set up well. Ethereum, nothing really different here. Still, we're consolidating right here, looking for the breakout above this overall resistance area right here. The big thing is the new pivots showing up on the daily for the new month are here now, coming in sideways between the pivot and the R1. Same thing I said on Bitcoin. If we rally up through here a little bit and we pull back, and we should find support here. There's little reason to think we should break down. Now, this is a lot of sideways here for the month. So, again, if we break out here and pull back to here, we should rally, probably run the pivots here. That gets us up there around, what is that, 20? It's almost 3,000, 29.85 or so. But that's overall, generally what we'd be looking at. It's not a definitive has to happen. It's more of a guideline that we look for as we do it. Let me see here. I think you were looking at like right around 2,500, weren't you?
24.33 is my target.
Yeah. So if I'm looking on here, I'm really kind of interested right around that point right there. 24, 21. Yeah, right around that area. That would be, an initial kind of area I'd be really interested in. So I like that it aligns there with what you're looking at for that kind of breakout target higher there. But overall, guys, we're breaking out of here. Remember, this is accumulation here. I'm telling you right now, this is accumulation. This is, a year and a half breakout. There's going to be pullbacks along the way, but you can kind of like buy in, and you should be able to hold for the next 2 years or whatever and do good there, right? Let me see here. I have you were looking for CHZ, right? Well, let me look at this real quick. I wanted to show you chess here. Chess USDT. This is a 2-hour chart. I think we've got a triangle here. I think it's A, B, C, D, E. So we should break out higher now based on the height of this wave 4 triangle here. I'd be looking for it to hit up there around 27 cents. So it's 20 cents now. So it's about 30% rally, right? So I like that. Let me see here.
Yep.
CHZ is asking about. I post so much stuff. I don't even remember what I posted on this one.
Yeah.
Oh,
No,
what
I
we
hear
got
you there.
Yeah. Okay, so we're looking at maybe like a 1, 2, 3
charts
here.
later.
Right. Let me see here. Let me take this count. This count isn't going to work at the moment here with the movement. We've got a pullback right now, 50%. So, the odds are this is probably a 1 and probably a 2 here. This would be a 4 right here, this big pullback. So wave 2 pulling into wave 4. I don't know, but we may do something like this. But basically the idea, we've got a wave 2 done, or maybe nearly so here. Let me look at this again real quick. Let's see, you got 1. Where's the low? Is this the low? 73.25. Yeah. This might be it's not going to be a triangle there. But yeah, so I'm looking maybe like an A, B here. So swing high is 81.21. That's the point I'm looking for it to break out to give us a wave 3 in progress there. Like I said, we pulled back about 50% already. The idea, this is probably a 1 and a 2 in progress here. Breaking out impulsively above that this daily pivot here. Just right above us around almost 0.075. That should have us going. That should indicate that 2 is probably done. That'll give us wave 3 expected target here. Right around minimum expected right there at around 14.5, 14.6 cents. Or give us minimum expected wave 5 up there around 17.5 cents. And that, of course, breaks you out of this long-term wedge we had here on this larger count. So it also gets you right up into this high volume node, or I'm sorry, low volume node area. Get rejected there, pull back, and then break out. So yeah, I'm not hating it. I think it looks like we're probably setting up for a good
I
push.
just pulled mine up.
But it's got to do it. Right now we're trying to get above that pivot.
Yeah,
you got yours
11.
up there?
No, I was working on it. But right now the 0.117 would be my target. Because it already hit the 0.085 target, so you would have taken profit off of this move right here. I was just starting to update it, but 0.117, and don't look at the chart; it's a mess. I was just trying to see where we were, but that's kind of that next area that I would be looking at. Huh?
The 1.117.
Yeah, 1171 would be That's why I was looking at your chart, see where that landed on your account there. I was just trying to see where that was.
Yeah. It could end up being like an interior major pivot there in that wave 3. So
yeah, and don't
let me
look
see
at
here.
The indicators; those aren't updated. So
yeah, we'll take it off there. You can't look at it anymore.
So where's the 11 set? Where does it hit on your? It's just above the 1.
It's right. Yeah, it's right around the R4 pivot, just between the 1 and the 1.236.
Okay.
Yeah.
All right. That's what I'm curious.
Now, obviously this could break down further. By the way, if we don't get a breakout higher here, just minimally above this 0.0772, if we come up here and get kind of rejected, we'll look for wave 2 right down here. It's around the 70.5 almost at the S1 pivot. And then we'll look for that rally up. And in that case, wave 3 would be around 13.5 cents or so. The 1.36 gets you right below that area where you were looking at. So we need to see if it breaks out here and heads up higher first.
Yeah. Real quick before you go on.
But yeah, until it actually breaks out above that.
What was real quick before you go on? What was your silver target again, real quick? I just updated my silver chart, so I wanted to see. I couldn't remember where it was.
Let me see here. Locally here, I've got a wave through at around $27.20.
Okay, perfect. Yeah, I got a zone.
Yeah.
I got a zone between 26.6 and 27.3, so that's perfect.
Yeah.
like
Yeah,
it.
works right in there. So that was great.
Yep. And it's on its way there.
Let's see.
Almost 26 now.
Yeah, it's working. It's getting there.
Yep. Yep.
Wait, let me just check real quick. Did gold actually hit? It's so
It probably
close.
did. Let me check.
Oh, it's so close. 2087 and 30 cents. What do we get up to so far? 2087 and 90.
Yep.
So basically $1.30 off the all-time high.
Yep. My target hit.
Just
That's
a reminder, guys, I've been showing this chart for a bit. TLT here. We're just now rallying up to the descending resistance. This is the monthly chart. You can see that we had this capitulation volume here as we got to the swing low. I mean, look at how much volume we have. Mav would love this. Look at this, man. All this volume compared to the previous volume. And the candle spread's like, 3/4 or a half of what it was here. Huge ton, extra bit of effort, less result than what you had previously. And then you have this gap up and this big move up, and now we're coming to resistance. So again, I think we're probably done here. I think we rally and break out higher. By the way, this was a bullish divergence from October of 22 until October of 23. So a year-long bullish divergence building here, RSI. So I think we're good for long for a while, guys. Coming in on that.
It makes me want to update mine.
I mean, it's a crazy round trip. I mean, it almost hit the all-time low from back here in May of 04. So kind of a crazy pullback there. What do I got in the queues here? I've got 3 and 4. Minimum expected wave 5 of 3 up here around 423. I think right now we get a pullback probably to the pivot. Fills in this gap right here from last week, beginning of last week, Tuesday. So I think we get that out of the way. I think we get at least a pullback down. I mean, it doesn't have to. It could just pull back right to the gap and then push up higher. But I think we'll get a breakdown to it. That'd be 378.5 or so. If we just kind of go from here or pull back just a little bit lower here around 383, right at the gap, I think there's a good chance we hit the R1 and then may get a pullback here and then rally up. And then overall, this target's probably going to overextend higher. But I think we go at least 423 right now. And this is just, I have it just as 1, 2, that would be wave 3 heading up there. By the way, that would carry us above to a new all-time high. So again, if you are still bearish off last year's Q4 swing low, shame on you. It is not a bear market, folks. Not with the Qs, not with the stock indexes, not with Bitcoin. I don't know how many times I can say that, right? For gold, I'm looking at GC1 exclamation point. It's the futures contract for gold on the CME. All right. Let me see here. Yes, I think. Let me see here. The only other thing I have here is I had this. I posted this on Twitter. Visa, and this looks like a nice ending kind of diagonal in here. We had this nice break, retest, breakout higher. It looks like maybe a 1, 2, 3, 4 going to a 5 here. It's probably nearing a reversal. Maybe we'll see 39.75 or so up here around the 38.2 retracement, wave 2 area. I think it'd probably be a pretty good place if we can get that. Probably look for a pullback down here toward $34, $35, $35 probably. Gets us right around that wave 4, that little bit of a wave 4 there. But, it could go further here, but I think that's probably where I'd look. If we can get this almost $40 target area, pull back around almost $35 there, just a little bit below that on Visa there. So, yeah, that's what I got. That's what I got.
Not one that I looked at. I didn't look at Visa at all. Interesting, though.
Visa have been a great one. Oh, wait, Matt, somebody's saying, Jules, what's on? Says, thanks for the MicroStrategy analysis last time. Did well for me. Man, I love it. I think we've still got, I think it's finally breaking out now, isn't it? Let me check here real quick.
I wonder if let me check mine too. I haven't looked at that in a while.
Yeah, it's been great. I mean, guys, listen, if Bitcoin's rallying, look at your Bitcoin adjacent stocks. Look at your MicroStrategy. Look at your Clean Spark, your Hut 8, your Riot, Mara, all that kind of stuff, guys. Yeah, that's what you want to be doing, right? Oh, yeah, this is great. We got 1, 2, 3, 4. Potentially 580 or even 621.70, it looks like. Let me see here. Yeah. The initial target based on the height of wave 4 here would be 580. Secondary target would be a push higher to about 621.70. I like the initial target there, though. It makes a lot of sense to me. I've got this. I think we're probably like an ABC is a 1, 2. ABC is 3, 4. Oh, that would go up higher, though, if that's going to be an ABC. Yeah, I might have to go back in here and look at this one more time. But yeah, I mean, based off of this local structure, that the idea this is a 1, 2, 3, 4 here, we'd have a minimum target of 580. So that's another, what, 50, 54.50 higher from where we're at right now, $54.50 higher. And you'll notice right here where we're kind of hitting is the previous area of support resistance right here, kind of gap down through it, another gap right up through it. Then you had your candle into it, break down through it, retest, rejection, come on down, retest, rejection, come on down. So, yeah. But overall, I think, again, we do have that nice rally there.
What was your target on
What was that?
What was your target? You were looking at
right now,
right?
It is 580. 580.
Okay. All right. I got 5.
You got your chart there? Can we pull up your chart?
Yeah, I just updated it. I was looking at this latest bull run move. Shows the 200% comes in at 566.92. And there's been 3 settles above this 141. So that 490 level for me is still support. And then 566 is that target for me. A little bit under where you are, but the movement and the structure looks good. Momentum is kind of flattened, but that could change pretty quickly if this starts to break out again above these highs. But yeah,
what time frame are you looking on that?
Oh, this is the 4-hour. Sorry, what were you looking at? Daily?
Yeah, I was looking. Well, actually, I was looking weekly.
Oh, yeah, no, yeah, 4-hour. Yeah. I got a 566. Yeah, 566 on the little bit more near term.
Okay, all right.
So
let me see here. Andrew's asking about BAC here. Let me see if I can get it loaded up.
Which one?
BAC.
BAC. I don't know if I have that one. I'll check.
Yeah, I thought I had it, but I can't find it at the moment, so I have to load up a new chart here. Let me see if it works.
Yeah, I don't have that one. What is that?
Yeah,
BAC?
Bank of America. Oh man, yeah, Bank of America.
Yeah, on the stock. Okay, I got you.
Yeah, look at that.
I was thinking crypto for a second.
I'll tell you, here's the first look at this chart. The first thing I see is this, right? And I see this down here. And so hitting this and getting this nice, huge reaction off here and breaking down through this, descending kind of resistance. Man, oh man, it looks like a bottom to me. It looks like a B, 1, 2, 3, 4, 5 C. Let me see. How far is that pullback here real quick? I mean, people have been shunning, as you can see, are shunning bank stocks for a while. It's a 78.6 retracement. I think we're probably good to go. Now, I'm not even so worried about this right here as much. I mean, this is the one you should have been watching. The lineup, the alignment there of these swing highs on this sharp decline here in this little nice channel. Man, should have been going long on this candle breakout here at least. But I think we're probably getting pretty close to 5 waves up, probably toward the swing high here. And so you'll probably get a chance if you're watching it to buy a pullback. This makes sense right here around. Just gonna throw it right here. This yellow box, 27.5 or to 28.40 or so. This right here. And so the idea is you'll get your bounce off here and head up. And then minimum expected. We'll take the furthest bit of that box there. We're going to assume rally right up to about there. This gives us a very minimum kind of wave 3 target up here, 42.15 after that pullback. So yeah, I mean, if you can get a reversal right around this 32 and a half area, I mean, if you're doing options, I mean, you can sell some puts right there. But you're looking for this target down here again, down toward this 27.5 to 28.5 kind of area. And then you're looking to buy there and rally up toward around 42. See, this gives us 5 waves up right around 46.5, which takes us to the all-time high. And so, that's what you like to see. You like to see that subwave into the swing high, pull back, and then the bigger breakout higher. Did you happen to have one up, you said?
Well, I was just playing around, but yeah, flip my
Bank of America
screen over. Yeah. One thing I was looking here on the weekly is just looking at, this is a simple thing to do, and you don't have to trade on it, but it shows guidance. The break of this trend line right here. Yep. You take the lowest point to the trend line itself, and you get the breakout, and then you get the target right here. Same thing going the other direction. Broke the trend going this way. Take the highest point to the trend line. Take the same rate of change from the break point. I'm roughing it in, and you can see it hits target right here. And now with it breaking above here, it gives you a 44 target. Not that it's going to go to there tomorrow, but if it does break it, that's a psychology flip to where it would start heading toward that direction over time, and then eventually you'll get another trend line sitting in there. I would just look at it's a simple thing to do.
Look what you guys just learned.
Yeah,
look what you guys just learned for free.
Yep, it's one of the things I do when I look at like weekly charts or a little bit longer term time frames. That's the first thing I do is I go in and find the significant trend lines and take those measurements and see if they actually come to fruition or not before making new lows. Because I mean, this one broke out but never came back down. This one broke out but never came back above it. That kind of thing. So those trend line measurements work pretty well. They're pretty good guides.
Yeah, great. If you're brand new and you're trying to learn how to trade and you're learning other things as well, I mean, that's a great way to get started. It gives you a general target to look toward. And however you're learning to trade, you can pop that in there as well and kind of go, okay, is this look like it's making sense with that there? So yeah, definitely, man. Definitely. I love that.
Yeah. I would just mess around looking at some things like there's this one here. This one's, I hate the magnet sometimes. There's this one here. This one probably, I don't know if this one worked or not. We'll find out. Taking an air. Oh,
you can do it.
Here. No, there's like a lag. It's like it won't let me. Yeah, this is weird. The lag.
It's around there.
Close. Yeah,
a little short, a little bit above, a little bit below. Yeah,
but I'm roughing in the lines too. If you really want to get, if you want to take your time and get the exact lows and those kind of things, there's that too. But
for sure,
they're good guidelines. Just if you're looking at a weekly chart and you've never done anything, just start with that, and at least gives you a general sense of are the patterns working? Does it look good? Because people like symmetry, and if there's symmetry like that, it works out pretty well.
Yeah, exactly. We like patterns. We're humans trying to find patterns in everything.
Yep. And if there isn't a pattern, we'll make a pattern.
Yeah, we'll make a pattern, right? It'll appear all of a sudden.
Yeah, exactly.
Especially if we're newer at trading. But anyway, okay, guys. Well, I think that's probably going to do it. We've gone through more than a few charts here for you guys and giving your thoughts. And, as the title said, the Bitcoin bull market has been pushing higher for a year. Are you long yet? Have you been long? Have you been arguing about it? If you've been arguing about it, see, here's the biggest thing, guys. A lot of people, again, we know certain names, right, are still arguing that it's a bear market bounce, right? Dead cat bounce, a bunch of nonsense. And I don't say that lightly. I'm not out here to give you any guarantees, but at the end of the day, you've got to, if you're trading, you've got to understand what you're doing. If you think you figured out that something is fake on the way it is, and it's going to do something else, right? As a trader, you take advantage of that. You don't just sit out. If you say to me, listen, Chris, I think this is happening because of this, and here's all my evidence and blah, 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 and you're that doggone sure of it, and then you're not trading it, I'm not going to listen to you. I'm not going to believe a word out of your mouth because it doesn't make any sense. as a trader, it's all about taking on that risk. You're speculating, guys. There is risk involved. But man, if you've got something that you think is so sure about why something's happened the way it is, you should be out there exploiting it. You should be out there making money with it. But at the end of the day, Bitcoin's in a bull market. Stocks are in a bull market. DXY is still in a bear market overall from that 114, 115 swing high. And, you know, there's nothing that you can sit out there and come up with all these mental gymnastics and word games and whatever to say why it absolutely has to not be. But at the end of the day, it still is. It still is. So you can either sit here and try to convince yourself and try to convince everybody around you that you're correct, or you can just give in and trade the market and make money, right? Do you want to be correct or do you want to make money? That's the questions at the end of the day, guys. And so, you know, most people at this point, hopefully will go, okay, listen, I've been wrong, but now I'm ready to be right. Now I'm ready to pay attention. Unfortunately, a lot of people are still going to be out there and just continue to fight it. And they're going to continue to lose money. And they're going to continue to give you every reason in the book for why things can't possibly continue the way they're continuing. And at some point they'll be right, but they'll have been wrong 157 times previous. So them being right at some point, does that really give them anything? No, it doesn't, right? You're in here to make money. Am I right? Type money in there, guys. If you guys are in here to make money, I mean, that's what it's about, being a trader, right? But it's not because of the money itself. You may think that if you're not really thinking about it, right? It's not about the money itself. It's what does that money give you? What does that money enable you to do? And that money should enable you to give you time. It should give you freedom. It should give you less stress because, you know, people are like, oh, money isn't everything. No, but I'll tell you what, if you've got enough money to pay your bills and some extra, you sure as hell don't have a whole lot extra to worry about when it comes to that. You know, if you say, oh man, I want to help family and I want to help friends, I want to help people, you know, less fortunate or whatever. Well, how do you do it? With money, folks. Money can't be evil if that's what you're thinking. If you're thinking these are the things you want to do with it. Stop taking that loser mentality. And I don't mean this to be rude, but there is a loser mentality out there. And I say loser mentality, not because I'm trying to be rude, but for the people that are losing money, right? That when they do that and they haven't changed their mindset to get it correctly, they say, oh, it's all a scam. Oh, money isn't everything. Oh, I don't need money to be happy. You know, and all those things. And they use these as excuses for why they don't have to sit down and do the things they need to do to get where they want to go. Don't fall into that trap. I'm not saying they're losers to be derogatory. I'm saying these are people who are losing money consistently in markets, and these are their thoughts. So they're the sayings that the people that are losing, right? Those people are making. I hope that makes sense. Okay. I'm telling you guys, we talk about all day, you know, Fibbo and I, we talk about all day about how to trade, you know, technically with charts and whatever, but you know, at the end of the day, your mindset is absolutely the most important thing. Your mindset and how you view life, how you view the charts, that's what's going to determine whether you can ultimately be successful or not. Not just in trading, but in life. Whatever you're doing, you own a business, takes a certain mindset to be an entrepreneur. It takes a certain mindset to be a successful business owner. You have to do things. You want to excel at work, it takes a certain mindset. You can't sit at the water cooler gossiping with everybody else and complaining about why things aren't going your way or things aren't going the way that you think they should. Get your butt out and make things happen. You know, do the work that needs to be done in the way it needs to be done so that you can get where you need to go. Okay? John, we both appreciate you, buddy, and everybody else. Thank you so much for joining in. As always, remember, the only thing you control is how much you lose. So you've got to actually work on that risk management day in and day out, okay? If you're not doing it, you're just asking for no success. All right? So get out there and do it. You guys have a great day, a great weekend. If you're with us at TWC, you know, whether with me or with Fibbo's group, we shall see you guys over there here after this, all right? All right, everybody, take care. Thanks so much for joining in, Fibbo. We love having you here, buddy.
All right. Thanks, man.
All right, take care, everybody.